Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Enlightened investors! If you're looking for a stable and tradable private real estate investing, and who isn't, we have a well of a show for you today. Michael Flight is a real estate entrepreneur and security token evangelist, expert in single-tenant, net-leased shopping centers and real estate traded on the blockchain. Beginning in 1985, he has extensively partnered with some of the world's most well-known banks, insurance companies, hedge funds, and institutional investors. Michael has been featured on CNBC, The Real Estate Guys, Bitcoins.com, just to name a few, and he regularly speaks at many real estate, blockchain, and technical events. He is a published author and the co-host of Nothing But Net, Triple Net Show podcast, and curator of the Chicago Blockchain's Real Estate Collective. Michael, before we get into the triple net lease and the exciting new world of blockchain real estate, share a memorable experience from your formative years that helped you to be the person you are today.
Oh, you put me on the spot there, Alan. The thing that kind of was a sidetrack to me, I at one time thought I was going to be a Lutheran pastor and went to college to be a Lutheran pastor. And Greek and Hebrew were a sign from God that I should not be a Lutheran pastor. So I kind of transitioned, thought about maybe going into teaching, which I probably should have because I could have been retired by now. But I eventually went into real estate because my brother and I, my junior year in college, I think it was my junior year, between my sophomore and junior year, we went to a nothing down seminar and we thought we could buy, real estate nothing down. We were young guys with absolutely no money at all. But the real estate bug hit me after that. So that was kind of how I ended up still in the real estate business since that time.
Well, interesting that you started out in theology, but you were dissuaded because of the languages. That is interesting to me. I mean, there's a whole lot more to being, I think, a Lutheran minister than delving into ancient texts. But anyway, well, glad you made it to where you did, and you have some interesting things to share with us today, and particularly being the fact that our audience is comprised of individuals looking for passive investments. I think you really have something to share with us today, and I am looking forward to sharing this with our audience. So let's start off with, if you would please, just what is a net lease property and how do you wrap brands around that in the real estate industry?
Well, we really love net lease properties. It's something that I've been involved with. I've been involved with shopping centers and retail real estate since about 1986. And most of those properties are leased what they call triple net, although shopping centers typically aren't full triple net. But triple net is where the tenant pays all the expenses. So the first net is the tenant pays the real estate taxes. The second net is the tenant pays for the insurance, which is the liability insurance for the parking lot and the fire insurance for the building. And then the tenant pays actually has a separate policy. They pay for everything inside of their space. And then the next net, which is the triple net, is the tenant pays all the maintenance on the building. So if it is a single tenant, triple net, true triple net deal, the tenant pays for repairing the roof, the tenant pays for repairing the parking lot, the tenant does all the landscaping. I live in the Chicago area, you don't need to worry about snow plowing, sweeping, all the rest of that stuff. All you do is get net income, which is why the title of our podcast is Nothing But Net, because you get pure net income. It's probably one of the most passive ways that you can invest in real estate. The other great thing about net leases is typically they're guaranteed by major corporations. So we've got leases with McDonald's, we've got leases with Walgreens, we've got leases with all these giant companies, and the money is just automatically deposited into your checking account. And with McDonald's, Walgreens, and a lot of these other guys, it's actually there 5 days before the beginning of the month. So it's truly what they call mailbox money.
So no chasing delinquent tenants, no toilets, no trash. What a deal. And you still get the equity the depreciation, the leverage, and income. Is that correct?
You pointed out exactly all the other benefits to it. So we remember triple net by the acronym TIM, taxes, insurance, and maintenance. The tenant pays them. But yes, you still own the property, so you fully depreciate the property. You get the benefits of that depreciation. And you can, if you want, there's a lot of people that invest in triple net and don't lever them up too much. But since the lease is guaranteed by a major corporation, sometimes I've seen where people have gotten up to 96% leverage because as long as it's a 20-year lease and it happened to be with, I think it was with Exxon or something like that, the bank is extremely comfortable that they know that they're going to be repaid.
So you said up to 90% leverage?
There was one that I've seen that was 96% leverage.
96% leverage. That is phenomenal.
But I want to say that we tend to be a little bit more conservative than that. So, but anyway, I apologize for interrupting you, Alan.
No problem. So 96% leverage, but the tenants, the reason you get that leverage is because the risk is reduced because of who the tenants are. So not only is that risk reduced for the lender, the lending institutions, whoever they are, whether it's insurance companies or banks or whoever it is that's lending to you, they've reduced their risk because they know the tenants, but it's also a reduction in risk for you, the owner of those properties.
That's true. We like to describe them as bonds wrapped in real estate, because if people are going out and buying like a corporate bond or a municipal bond or something, that, is there and it's just, clicking off the payments. These are actually better than that, because if the tenant happens to go into bankruptcy, the rent is prioritized over even the bond payments. So that's even, and like I said, these tenants, the last thing they ever want to do is to be late on a rent payment, because it dings their credit as much as it would if they didn't pay, on a bond payment.
And credit is, like us as retailers and consumers, our credit rating is important to us, but to them, it's a business matter. So it's critical for them. Well, how do you get into this?
You can get into it a number of different ways. I got into it right out of college, and I decided I wanted to get into retail real estate because when I started out, I was doing leasing, and I realized that you could do multiple leases with retailers. But somebody that's just starting out into real estate, they would want to study a little bit and know a little bit. And it also helps a lot of people that do end up investing in triple net real estate. Some of them have made their money in restaurants, so they're very comfortable with the restaurant industry. Some of them are doctors and dentists, so they're very comfortable investing in like a DaVita dialysis, or they're very comfortable investing in an urgent care facility, or they're very comfortable investing in an Aspen Dental or a Heartland Dental. So a lot of people get into it by knowing the industry, but you can get into it probably, it's just a little bit more complex than an apartment, because people owning an apartment building, everybody's lived in a house and everybody's lived in an apartment. So you kind of got that knowledge. But once you get outside your comfort zone, you go and do a little bit of investigation. And then the other thing is you should talk with, there's a very active net lease brokerage community. There's a lot of information out there. And I will also say on our website, we try to provide a lot of educational material for somebody just trying to get into net leases and learn about them and know about them. And that's exactly why we saw that there was a hole in the educational space for net lease properties, because there's not a whole lot of information on net lease properties. So that's why we started the podcast as well.
We'll be right back after a word from our sponsor. As an industry-leading relationship-focused design-build construction firm, Mosaic Construction has worked in many different asset classes from multifamily to retail, medical, industrial, and commercial. Mosaic Construction works to execute interior and exterior renovations with their team of trades and project managers. Their experience with value-add improvements has resulted in increased ROI and long-term value of the assets. They work nationally in partnership with local trades to deliver thoughtful, problem-solving construction management solutions to all their clients. For a personal, no-obligation consultation, call Ira Singer, 773-491-3145. or email Ira at mosaicconstruction.net. You can also find Ira on LinkedIn. Yeah, you're right. There's just not a whole lot of information out there regarding triple net leases. They're a mystery to many of us, so there really truly is
but I just want to say that it is a large market. Last year during the pandemic, the triple net space in terms of investments got up around 20% of total, commercial real estate investments. So it's a large market. It's actually a much more liquid market than a lot of other properties because it is so active.
I never would have guessed that. That's a surprise to me. One thing has concerned me about net lease. I don't know a whole lot about it, obviously, but one thing that has concerned me is that oftentimes there's single tenant occupancies, and even if they're not single tenant, there are 3 or 4 or 5 tenants in there. That has always seemed to me like a huge risk, because even if it's a Walmart, Walmart, I think, owns all their properties, but let's just use Walmart for an example, because they have done this in many communities. They have been the pull for these strip malls. They build their own facility down the street and they pull out, and they have left that big draw empty, and those strip malls just essentially dry up.
You are correct that especially with a single tenant, if that tenant does decide to leave, you could be in a lot of trouble. That's why you need to know a little bit more. So a lot of people, when they invest in triple net leases, they solely look at the tenant's credit and they say, oh, this is great credit. And, I just can rely on this check and coming in. But what we do is we look at the location first, because number one, is the building releasable? Number two, is it a good location? Because if it's a good location for one tenant, it's going to be a good location for the other tenant. So we look at, does it have access? Does it have, signage? And I'm primarily talking completely about retail real estate, because there's other triple net properties out there. You could buy a triple net property in industrial. You could buy a triple net office building. There's even triple net. Most of the casinos, a lot of the large casinos out in Las Vegas are actually owned by triple net property REITs that actually own the property, and they're operated by the casinos. So, but anyways, what we look for is an irreplaceable corner. We also look for, is there population growth? It's all the same type of thing that your average multifamily apartment investor would look for. Is it a good location? Is it in a growth market? Is it something that, there's a reason for people to go there? Then the other thing is you want to look at how long the lease term is. So if somebody is a novice, I would recommend not doing anything shorter than a 5-year lease. But I think that you should actually look into something like a 7 to a 10-year lease. There are some 20-year leases out there. You will pay a higher price and pay a lower cap rate to get the longer term lease. Somebody like us that has experience in redeveloping these properties, retenanting these properties, and we have relationships with tenants, will take the risk on a few shorter term leases if we know that the property is really a leasable property. So you are absolutely correct. There is a risk that the tenant could go into bankruptcy and stop paying rent, or could leave the property and stop paying rent. And you mitigate that through, number one, getting a quality tenant, and number two, getting the best location possible in a higher population area.
There's another tenant concern that I have had with net leases, and that is the magnet retailer has a 10-year lease on the property, but they want their own site down the road. So they build their own site. They pull out, they have a 10-year lease, and there's a vacant magnet in the middle of your strip mall. And I know that has happened in communities across the country.
We've been involved with a number of those. We've actually been involved with demalling, which is taking enclosed malls, 3 of them, and actually demalling them because for one or another reason, the anchor tenants left and yet we had to reposition them. In one of them in Milwaukee, we had to empty out all the tenants in the middle. We took some of the tenants that were actually, like Walgreens was inside the mall. We built around the periphery. Then we ended up knocking the mall down and giving a pad to Walmart. And Walmart actually built a freestanding building there where the mall was. New Jersey, we did the same thing. We ended up emptying it out, delivered a pad to Costco, and Costco ended up doing that. So you are correct. There is a risk with that. One of the things that we saw since we saw the evolution, and retail is always revolving. It's never standing still. There's always different things. But the evolution that we saw was malls to what you would refer to probably as strip centers, where the Walmart's in the middle of the thing, to a lot of tenants now going to freestanding. A lot of tenants want drive-through properties. And so that's why we've kind of followed them. And in 3 years ago, we've done, portfolios of single-tenant net lease properties in the past, but we went and said our model is going to be investing in all single-tenant net lease properties because that's really where retail is headed. And you'll see now, since the pandemic, and we're recording this after the pandemic, even Apple stores and a lot of other mall tenants now are all looking for freestanding properties, still in the center of the retail nexus, but they really, don't want to end up in the middle of a mall anymore.
We'll be right back after a word from our sponsor.
Would you ever invest all your money in a single stock? Very unlikely. Yet investors are willing to risk $50,000 to $100,000 in a single property in real estate all the time. Avestor is the world's first customizable real estate investment platform. Investors can build their own custom portfolios selecting investments across multiple asset classes such as single-family homes, multifamily, student housing, self-storage, and shopping centers. You can also invest across multiple markets and different time frames. Avestor also enables other real estate entrepreneurs and syndicators to build and use Avestor's infrastructure and cloud platform to create their own customizable real estate funds. To learn more, visit us at avestorinc.com. Avestor, real estate investing made simple.
Interesting, but yes, it certainly is always a changing and evolving industry, as all industries are. One of the big changes, of course, and this is something you're heavily involved in, is blockchain. That's a new thing for all of us, but it's particularly new for real estate. And you probably have more experience in that than just about anybody I have ever talked to. So take us to blockchain. And you say that blockchain is now the rails of the new financial system. Why is it the rails of the new financial system?
Right now, the stock markets, the banks, and everything else, it's been cobbled together since the 1970s. With blockchain, a lot of this stuff is moving. It's international now. For example, I can tell you that we wire money overseas, and we've wired money overseas, and they're never sure whether the wire goes through, for like 7 days from the bank. We've actually had banks, lose the wires versus if you were doing, and I'm just going to use Bitcoin as an example because it's the, most well-known cryptocurrency that everybody knows. If I were to send you, 1 Bitcoin and you agreed to pay for the Bitcoin and I put the Bitcoin up, the transfer goes through immediately. Whether you're sitting in North Carolina or whether you're sitting in Singapore or whether you're sitting in Europe or Africa. And that just doesn't happen right now with the current banking system. The other thing is that the stock market, there's all these fractured stock markets all over the world. With blockchain, things can trade 24 hours a day, and it's all on the same rails. It's not on, the New York Stock Exchange rails over here and the, Eurodex over here. So, and it's where things are going. So our securitization platform is called Securitize, and Securitize is the one that's tokenizing our fund. And Securitize just got a major investment by Morgan Stanley. Securitize, one of their initial fundings, Nomura Bank, Deutsche Bank, and 2 other Japanese banks. So all these large banks see that the way things are going, it's going to be riding on a blockchain. Everything is going to be digital assets, and it makes things much more tradable. And then we can get into what the benefits are for real estate people and especially real estate investors, if that's, where you would like to go.
Yeah, let's go there. So this is a new phenomenon, really, being able to trade real estate through Bitcoins. How do you do that?
Okay. I am going to say that we are not trading real estate through Bitcoins. So our fund is tokens that actually ride on the blockchain, just like a Bitcoin rides on its own blockchain. So our fund, you would invest in it just like you would any private real estate syndication. So you get your shares in the fund and all the rest of it. But you also get extra benefits where you can take those shares and you can either trade them with somebody. Like if you're an accredited investor and I have shares, I can trade you my shares directly, peer-to-peer, person-to-person. After 1 year, you can trade those shares to accredited and non-accredited investors. The other thing is that those shares can be listed with a broker, so you can sell those shares through a broker. Those shares can be listed through these new market-making things that are electronic exchanges called ATSs, and there's also security token exchanges. So it brings in a lot more options for real estate investors. They can be comfortable in the fact that if they need their money right away, in our syndications in the past, they would have been with us for 5, 7. My mother just got out of a deal that my dad invested in 1984, 85. And she couldn't get out of that syndication, and it finally went bankrupt. It was a hotel, so that she was just stuck in there for 40 years. And so you're kind of at the mercy of the sponsor with a private real estate syndication. With this, it gives you much more options for liquidity. In addition to that, you actually control your own money, you control your own investments. So you can take your monthly regular income payments that we pay out through the fund, and you can either get directly an ACH payment directly into your bank account, or you can take your money as a US dollar stablecoin, and then you're actually on the rails of the blockchain, and you can deposit that and get extra interest. We've got an affiliate agreement with BlockFi that you can deposit your stablecoins with BlockFi and get an extra, I think they're up to around 8% interest per month, in addition to our regular monthly payment.
This is very, very fascinating, and I'm definitely going to have to learn a whole lot more about this. We have just scratched the surface on this. You had mentioned earlier that you have a lot of educational materials on your website. So tell us what your website is. How can our viewers and listeners find you and get in touch with you and get this valuable educational material?
Our website is libertyfund.io. That's libertyfund.io. They can find me on LinkedIn. I'm also on Twitter and other places, but the best place to find me is at libertyfund.io. If you're interested in learning more, or you're interested in me sending you our blockchain real estate report, just send a note to hello@libertyfund.io, and we'll send you our blockchain real estate investing report. We have a lot of information there. We also run the Chicago Blockchain Real Estate Collective meetup, which we bring in people that are doing things actively in real estate and blockchain. And then the other thing that we're putting together this year in Austin, Texas, is the Blockchain Real Estate Summit. That's at blockchainrealestatesummit.com. And that'll be in Austin, Texas in September. But like I say, if they go to our website, we've got videos up there. We've got all kinds of information on triple net real estate investing. And it also has connections to our podcast, the Nothing But Net podcast. And like I say, we just want people to be educated about this because we think it's, the future. And we think it gives them extra benefits as investors in real estate.
Enlightened investors will be right back after this important announcement. I have a big ask that will only take a moment of your time. Ratings and reviews are the lifeblood of our podcast. So to leave a review, iPhone or other Apple iOS device users, go to Apple Podcasts or iTunes. For all you non-Apple device users, go to podchasers.com. On either platform, search for Real Estate Investing Abundance. Once found, please leave a review and a rating. Subscriptions are also vital to our show's success, so please be sure to subscribe on your favorite podcast app. It is free to subscribe, and you can unsubscribe at any time. Yeah, it certainly sounds like it's going to give a lot of flexibility for a lot of investors and open up a whole lot of new doors for various options to not only diversify, but it's a way to even get started in real estate. And that 90%, 90 to 96% leverage, that just sounds very attractive to me. Well, let's go into our last segment here. And Michael, share with us one of the most difficult setbacks you've experienced in life, and how did you come through that time? And what did you learn from that experience?
We've had some up and downs. Our company has been in business since 1990, and we've been through now 4 downturns. And we're on our 5th cycle. And, the biggest thing is that the cycle usually comes out. And, there's going to be buying opportunities, and there's going to be a lot of, good real estate out there. You just have to make the wise decisions. And probably one of the reasons why I really like triple net properties is because I've been burned so many times by construction risk and construction projects. I can tell you that one of the most difficult setbacks was after the 2008-2009 crash. We were buying, and this was a partner of mine who does residential real estate, and we had flipped, probably around 100 to 125 houses in the past, and it wasn't part of my main business, but we were buying and flipping houses back then. And his brother was running the construction. We thought everything was, working well. Well, it turned out that his brother was actually just taking the money and then, disappeared with the money. And we had raised money from institutional investors. So I had to come out of pocket to actually pay, to get the construction fixed. And we lost all the money that, we had entrusted. So that's, one of the things. It was tough to get out of. It was at the same time that I had loans with banks out there, and they called the loans on the banks. And when I talked with the banker, I said, we've already paid our loan. We've never had a problem. Why are you doing this? Then the banker had actually left and went to another bank and called me up. He goes, they're not going to make that loan to you. I'm like, why not? He goes, because you can actually pay. So they're not going to extend your loan. They got all kinds of people that aren't going to pay. So they need your cash to, So we were in a tough squeeze, but we made it out. And there's ups and downs in life. And, I've always you try to be as honest as possible. The banks, and everybody else will work with you, if they've known that you've been square with them in the past. And that's the other thing with investors. There have been some deals where we haven't made the money that we originally thought we were going to make because of going through these downturns. But, we took personal responsibility for if something happened and we made a mistake, we're going to make good on it.
Well, my last question, Michael, is imagine that you have come to the end of your life. As you lay on your deathbed, what will you look back on as your greatest fulfillment and joy?
I have to say that it's my family and my children. And I can tell you, vacations, told many people, I've mentored many people. We've got many young people working for us. And I've always said, it's like, no matter what happens, in real estate, no matter what happens in business and all the rest of it, the key thing is that you've got family and friends, and those are going to be the moments that you remember the most. If you're going on a vacation with your family, this and that. I, was fortunate enough to bring my kids to 45 states and a few different countries, and it was all, real estate driven. So, if you can combine family and work, to me, the most fun. But that's what I will absolutely 100% remember the most, family and friends.
Michael, it's just been a delight having you today, and what a wealth of new information for many of us. So thank you so much for being on the show.
Alan, thank you very much. Really appreciate your time.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.